Hey everyone, so we wanted to start doing some deal breakdowns of some of the most recent sales that we've had and kind of show you how we analyze properties for both sellers and buyers, how we would, what our pricing strategy would kind of be when we're talking to a seller, and also for a buyer, what we would recommend would be a good deal, or maybe what we wouldn't recommend is a good deal. Kind of show you some of the numbers annually, monthly, and just give you a good breakdown of some of these deals and see whether or not they were actually a good deal for the investor or not. And so I want to dive into this one particularly. This is a fourplex that we just sold within the last few months. The asking price was $620,000. The annual income on this property was $64,200. And the annual expenses were $24,209, and that includes vacancy as well, wrapped in the expenses. That's pretty much all the expenses that you're gonna have. Pest control, taxes, insurance, utilities, management, all of that stuff is wrapped into those expenses. Now the GRM, this leaves us with a 9.66 GRM, which is actually, compared to 12 months ago, that's actually a really good low GRM. So last year it was not uncommon to see 11 GRM being a very low GRM. Maybe 12 and 13 was kind of average, and then you could push up a little bit if you had a really good property in a really good area. But now we're starting to compress a little bit to 9.66. That's kind of typical right now in Bakersfield, is right around mid 9s or so. Cap rate is 6.45%. And again, maybe at 6 to 12 months ago, we were seeing a cap rate of 4.5%, maybe 5% if you got lucky. But it was a lot lower than this. 6.45% is really good compared to last year. But of course, the big thing that really changed from 6 to 12 months ago is that interest rates have gone so much higher. And that's really going to compress your monthly budget. It's going to compress how much cash flow you actually have. So let's look into the monthly numbers. The monthly income on this property, $5,350. And the expenses, which includes everything again, it's $2,017 a month. Now, if you add on debt to this property with a 20% down payment and about a 6% interest or so, you're going to get $2,973 a month. Now, your total expenses with expenses and debt together is $4,990. That's with your mortgage, your insurance, your taxes, all of that stuff, and all of the expenses together, $4,990. That leaves you with cash flow of $360 per month, or $90 a door per month. That's actually a pretty good deal right there. This property was in pretty good condition, and it was in a really good neighborhood too. And the market rents were actually, the current actual rents were about 20% under current market value. So there's still a lot of room to grow as well. That's one of the things we really look for our investors is there a really good potential in that property to continue to grow it? Usually you find that value either by flipping a property, fixing it up, and then adding a ton of value to the property. But especially with multifamily properties, you find that value add in being able to raise those rents. And being 20% under market value means there's still quite a bit of room still to grow and add a ton of value to this property. But even with the actual current rents and the current income and the current expenses, you're still getting a cash flow of $360 a month with all of your expenses factored in and all of your debt factored in, and with the income potential to grow. This is what you're looking at, $360 cash flow. This is a deal that we would absolutely recommend to our investors to buy. And just a note, we were actually representing the seller in this deal. We were asking for $620,000. It got bid up to $645,000 with no contingencies, with no appraisal contingency either, and they paid above the appraisal value. This property flew off the shelves with a ton of offers over asking price as well. This is actually a really great deal. Tune in next time. We'll look at a couple other ones and kind of look at some good deals and some bad deals as well.